Welcome to Elementary, Mondays at 6. I hope you're having a fabulous day wherever you are. I hope you've had a fabulous day. And I hope you're enjoying life. So my guest is going to ask me to join, and Monday, it's always great to have a good start to the week. But your day is what you make it. Hi, Kimberly.
Hi.
So nice
How are you?
to meet you. Yeah, good. I'm good. How are you?
Good. Thanks for having me.
Yeah, thanks for agreeing to come on the show.
Absolutely.
So we'll get started. Perhaps start with telling people your Instagram handle and who you are and a bit about yourself.
Yeah, for sure. So my name is Kimberly Miller. I'm a mortgage agent. You can find me on Instagram at Mortgage by Kimberly, Ley. Just come to go spell Kimberly with Ly. It's Ley.
Yeah. Okay, yes, Ley. Yeah, there's two ways of spelling Kimberly, right? Yeah. So just get the right spelling. And if you can't find her, go to my profile and you'll find her. So, we'll jump right in. And, let me ask you, what advice would you have for first-time home buyers in terms of preparing for finances, to get ready when they're applying for a mortgage?
I would say just to be on top of your financial situation, just because everything is so crazy right now, and homeownership is such a big purchase, probably the biggest purchase a person can make in their whole life. So just being on top of your credit, paying your bills on time, just knowing where you stand, and if there's anything that you have to correct, being on top of that and doing so, saving enough for your down payment and closing costs, and being aware of where you want to live in the GTA, because that's a factor as well.
Yeah. They say location, but sometimes budget cannot buy you location. So, I mean, that's the hard part, right? But, having someone who can guide them through that process, really makes a big difference, don't you think?
Absolutely. I think it goes hand in hand, mortgage agents and realtors.
Yeah, for sure. So for pre-approvals and first-time home buyers, right? What's the importance? I know people sometimes, don't really pay attention to this piece as much, but what's the importance of
pre-approvals? So a pre-approval is pretty much a guideline telling you what you can afford. Would you go grocery shopping, or would you go to a Michael Kors store without knowing what you could afford? So the same thing applies to houses, right? So you would need to know what range you're shopping in. It'll tell you, your range. It'll tell you if there's anything outstanding on your credit. It's always best to get a mortgage agent to guide you with that, because that way when a person goes to a realtor, they say, hey, this is my budget, rather than, hey, I don't know, I hope I can afford it. You save time, you save the realtor's time, you save your own time. So just being aware of your budget and your whole financial statement picture.
Yeah, no, it's true. I had a lot of times I'll have people come to me, and I don't really like, getting to that process of showing, because I think I'm setting them up for failure. I'm setting them up for disappointment, right? And I think it's the most important step to at least get, some of your ducks in a row, and then we kind of come up with a plan. But really, just to kind of understand, like you said, there are a lot of people who go shopping without a budget.
Right.
Not a good thing. But they're unfortunately, when it comes down to mortgages in this day and age, it's so much more than, the lenders are getting so savvy with who they're lending to. They want to know all of these details, right? So it's so important to really have that. And I'm saying it just avoids you from having heartbreak, because you're going to see this house, which is way out of your budget. You're going to fall in love. And then I'm going to have to, talk you off the ledge.
I'm sorry. It's not going to happen right now. And then you're home. And that's why, being prepared is the best way.
Yeah, absolutely. So I want to, before I ask you any more questions, I just want to tell our viewers that, there's a question icon and there's a comment section. Either one works. If you have a question, feel free to drop it. I've got a number of questions, and we're going to try and fit your questions into today's session. But either way, one of us will get back to you. So what are some of the key factors to consider when evaluating, like, or what are some of the key factors that lenders consider when evaluating like a first-time home buyer loan application?
So lenders generally look at, first and foremost, your credit score, because they have to see if you're able to afford paying for a mortgage. They want to know if you have any outstanding debts, like what's your history like, what's your score, like what does that picture look like? Then they're going to look at your income. Have you worked for a long period of time? Generally, it's 2 years. Like, do you have job history? Do you have job security? You know, the last thing they want is to like say, hey, here's a mortgage, and then the next day you quit your job. Or you got, something like that happens. They're going to look at your assets, like where's your down payment coming from? What's your bank account history? Like, what does that look like? Your TDS ratio, your GDS ratio. So they're looking at that whole picture to make sure that you are a qualified candidate for them, because they're lending out a lot of money as well.
Yeah. And I'm asking a lot of first-time home buyer questions because I do know that you specialize. Even though you work with a ton of other buyers, you do specialize. And, it really takes like an extra step because you are doing a little more hand-holding, explaining, which is great, really. But, for those home buyers, like looking, obviously these sort of things are so important for them to get in before they go home shopping, right? Just to understand what they're going to qualify for and how important those numbers really are. Just a crazy example, I had a lady who we were buying, and it was right before we were going to close, and they changed jobs, and I was like, oh my God,
No.
you changed jobs? Like, but you didn't tell me, and you didn't tell the lender, and oh my God. But the good part about it is they were in a very like high paying job, and the job they actually took was even higher paying. So it was not a problem, but it's like, you just get so like worried, like, oh my God,
Yeah,
what's going to happen?
absolutely.
Right? Especially now with the rates that were changing like so rapidly, right?
Exactly.
So how can,
Oh,
sorry,
sorry.
go ahead.
Yeah,
Go
like
ahead.
when it comes to making purchases, like during that time frame before closing, we always recommend that you don't change your job, you don't apply for any new credit, anything that can like ding your credit score or like can impact your application. We always recommend like avoiding big purchases and stuff like that, just to avoid, a lender rescinding their offer. And then you lose out on your loan.
It's like that new car, right?
Yeah. Don't get the new car. Wait.
So how can the first time home buyer like determine the appropriate mortgage amount, monthly payments, that sort of stuff that align like with their budget and financial goals? Like,
Well, again, you could always go with a mortgage agent if numbers aren't your thing. But the CMHC always recommends that you don't go above 32% of your gross income when it comes to mortgage payments, heating, water bills, etc. So that's a guideline that they give you right there. That's like a general way to know what you can afford. If you want to go deeper, of course, go to a mortgage agent and get that sorted out. But that's pretty much the guideline, 32%. And then there's other factors like the TDS ratio, the GDS ratio, and like, you can go deeper into figuring out what your best payments are. But you always want to avoid being house poor. A lot of times people get a house and they're so happy to be in there, but then the bills start coming in. The maintenance starts hitting, like all of those like extra expenses that they didn't think about are affecting their, their bottom line, what they can spend on for fun. So they end up having this lovely house, but they can't afford to do anything else.
yeah, no, you're right. You're right. And I mean, these things are put into place for a reason, right? Like to help people kind of have some leftover or deal with unforeseen expenses that may happen over time. Um, yeah, so it's so important. I know people can get carried away and want to spend more than they can make, but it's so important to keep a check on that. So,
Like Um, oh,
No, go
sorry. There's
ahead. Go
a
ahead.
there's like a popular meme on Instagram where like it shows someone buying a house and it's completely empty because they got the house, but there's no furniture, there's no bed, there's no
Who
groceries,
needs
just
that?
because they got the house and it's just like, huh, I'm here. There's nothing else happening. It's just empty walls. It's just great crying on the inside. So I mean, just avoid that from happening. But like it circulates and like it's a true story.
Yep. So, do you know, like, are there, what are some specific programs that are designed for first-time home buyers that can help them?
There's quite a few actually. The government of Canada has their first-time homebuyer incentive, so it'll help with a down payment, whether it's a first-time home, like a pre-construction, or a resale existing home.
Yeah.
So they'll help with like down payments of that of 5% to 10%. Then there's a newer incentive, which is the first-time home buyers savings account, which is really cool. It's similar to a TFSA, like it has the benefits of that. So they're able to do contributions and would like up to $8,000 a year and withdraw it similar to an RSP. Sorry, deductible to an RSP. Interest is earned like a tax-free savings account. Withdrawals, like qualifying withdrawals, are tax-free as well, like a TFSA account. And you're able to have the funds up to 15 years. They have to be used within 15 years. So like there's a lot of like, they took like the good parts of a lot of different accounts and made this like great like savings account for people to, get their down payment saved with a good interest rate, hopefully boost up a little bit faster. But there's
Yeah,
a
yeah.
lot of options as land transfer tax incentives. There's so many like options available to people. It's just a matter of, taking a look or having a mortgage agent or a realtor help you out with that.
And what about like down payments? I know that plays such an important part in the buyers. And so, what are some options or strategies, um, you know, that helps with buyers that have limited down payment funds?
There was various ways to go about it. I mean, there's the traditional way where you just save your money. You can get money gifted, like if you have very generous family members, they can help you out with that. Let's see. There are alternative ways, which, depending on which route you go, they can be recommended. Like there are alternative lenders that will lend you your down payment, but of course that comes at a cost because the interest rates would be astronomical. But that's an option as well. Yeah.
Yeah, I know there's different programs in place as well that can help. Like you mentioned earlier, the assistance programs. I know a lot of lenders don't really like taking those ones on, but it's a great opportunity. Like if you had, I know there's some criterias and some numbers that go with it, but if you add like all these RSP, like I say to people that if your employer is giving you a 2%, and the only way you can get that 2%, 4% RSP match is by matching it, it's free money. So it's kind of a no brainer. That would be the first place you would just max out, right? Because you're going to get that money and you can actually use the RSP. And if nothing else, and if your employer has rules around vesting periods or whatever, which, I don't know, I know vesting periods changed over time, but if they do have rules, the good thing about it is that you can still use your portion of the amount, right? So
Yeah,
there's all these little things you can draw from just to make your down payment, your closing costs to get you really where you need to be, don't you think?
yeah, absolutely. There's a lot of options available.
Yeah, and if nothing else, like a plan on how to save and get to this spot so that you can actually put a plan in
Yeah,
place, right?
yeah.
Yeah.
That's actually another thing I'm working on right now. I'm working on my LOQP. One of the reasons is because I help so many first-time home buyers. A lot of times people aren't ready, like they don't have a down payment yet. So, a couple weeks from now, I'll have that license and be able to like help people come up with a plan to get to their goal of home ownership,
That's
whether it's like
excellent.
savings, investments, and then like down the line, home insurance, etc. So it's one of those things where it's like just from the beginning to the end. I feel like when people find the right mortgage agent, the right realtor, we are there to guide and hold their hands and, help them figure out how to get that down payment and show them all their options that they might not even know
Yeah.
exist.
No, absolutely. I mean, I get so excited when people actually are able to achieve, especially when they're struggling, because I know how hard it is to get there. And then when you get and you achieve it, it just feels so good. It's like a different feeling,
Yeah.
right? Other than the feeling of, it's nice when you have clients who can just afford to buy whatever at whatever price. But when you have a client who's like literally like trying to do it on their own, trying to like really make ends meet and have this, dream come
Yeah.
true, it
We
just
are ready.
makes you feel, yeah, isn't it? It's
Yeah,
awesome.
absolutely.
It just gives you a different feeling of accomplishment, right? And a lot of times it's about the business you get from it. Like people don't understand. It's that you build relationships, and the business that you get from it is far beyond what you could pay for. You know?
Exactly.
Yeah,
Like just seeing like the happiness of them finally getting their home and like
yeah,
getting that, achieving that goal, it's amazing. Like I know people with money are absolutely great, but like seeing them, like you said, just start from the beginning, from the bottom, scrape everything they can, and finally achieve that goal, it's amazing. Like the best feeling.
yeah, yeah. No, absolutely. So, like, what is like the current situation? Hopefully, it'll change soon. But the current situation, how does that affect a first-time home buyer with rising interest rates, so on?
Yeah, I mean, it scares a lot of people. They see the rates going up and they think, like, this is something I can never afford. But at the same time, it's when you're financially ready, that's when you're ready. Rates go up, they go down, but just being able to afford that down payment, afford your closing costs, afford like monthly mortgage payments, once you're ready to take on all of that, then you'll be able to like afford your home and buy the home. The interest rates right now, they seem very high. They're trending to go down, but right now it's predicted that it's not going to go down on the next announcement, you know?
Yeah,
Um, just because like spring season, as you would know, it's a busy time in the real estate world,
yeah,
everyone's buying and selling, and they don't predict that it's going to drop on that next announcement, probably after that busy season. But if you're financially ready to buy a home, I think just go all in because the house, as you know, houses come and go, and that dream house won't always be there. So,
yeah.
yeah, I definitely think like once you're financially ready, after doing all that work, like just go for it.
Yeah, and you can always refinance, right? Like, that's the other part is refinance if you can afford to get into the market. The other piece is that, but my next question to you is about different
Yeah,
rates, right? So maybe let's talk about different rates, like different types of mortgages,
yeah,
variable, whatever. So what are like some products, mortgage products, and like how do people weigh the pros and cons of those
yeah.
products?
So like the main ones are the fixed rate and the variable rates. Variable rates right now, anyone who has one probably isn't the happiest person, just because it probably went from maybe 2% up to 5%. So that affects their monthly payments, and that's where the different types of rates can affect your payments. So the fixed rate, you are locked into an interest rate for a certain amount of time. It could be months, it could be years, depending on your terms. Um, and then the variable rate, it changes as the Bank of Canada announces. So it could go up, it could go down. It's very risky. However, it tends to be lower than a fixed rate. So there are pros and cons with it as well.
Yeah, I know it's a little odd because this is like the first time I've seen like variable rates shoot up even higher than fixed rates, right? Like this is like a very different market that we've been in, which is so crazy um, and confusing for some because obviously, um, I did a variable rate like for the longest time, only because, we always looked at the rates and where they were going, and then they started going up a little bit and then they came down. But it's a little different, right? Like I think, you know, I think one of the things is, people have to understand that not all rates, like all mortgages are equal, right? Like there are different types of products. So like I guess working with someone like you would sit down and figure out their goals. So maybe tell us a bit more about like how would somebody, especially a first time home buyer, you know with potential challenges, like how would they like maneuver through the rates, the challenges, everything else that's going
Yeah.
on, like how would it work out for them?
Again, so I guess it depends on this, but like the type of mortgage rate you have affects your budget. And I feel like long term planning with the right mortgage agent, financial planner, you're able to set those things in place so that if the rate goes higher and you end up paying more on your monthly, you're still paying your principal, because a lot of times what happens is the rate gets so high, so their monthly payments are going all to interest and their principal isn't getting paid off at all. So like when it comes down to refinancing, they're going to have a lot more left than they thought they would. And if they're not aware of that, they're going to be in for a really big surprise. So I would recommend just planning ahead, saving, having emergency funds, and being aware of what you want to do long term, because not everyone wants to live in their house forever. It could be an investment. It could be something they want to flip. So the type of mortgages can affect that. If it's a open mortgage where they're able to pay it off any time without penalties, that could be an option. If it's closed where they're locked in and, then they have the penalties. But, all of those factors affects your rate as well, depending on what your situation is. So everyone can be affected differently by it.
Yeah. I have a lot of times, buyers will come and they'll buy a house and, they've got a 5-year rate. And then when they walk into, they'll be like telling me, hey, this is my 1-year house, right? Like I'm going to sell it in a year. And I'm like, why? Like, why are you going to sell it in a year? You just bought it, right?
Yeah.
But they haven't planned, right? Like they haven't planned.
Yeah. So in your experience, typically when people want to flip their houses, is it true that it's 2 to 3 years before they sell, or like before like they sees a rise in equity or value?
Well, typically we say, typically, and we haven't had anything typical in this real estate market for a long time, but typically what we would suggest to people is 3 to 5 years is like what we would suggest for you to hold that home, because now you're building equity, you're trying to, like if you're just a first time home buyer and you're hoping to get a little bit more money to put it on a bigger house, then a year, 2 years is not going to do it, right? Um, 3 to 5 years is kind of that sweet spot where you've paid up like the interest. Now, the kind of markets we've been having are like a little crazy where the market's up and then the market's up and then the market's down. And then, you know, and even if like there was like a time where even if someone wanted to give you a house for free, people would say no to it, right? Like, you know what I mean? It's just like this is what's been happening. Like it's just a little crazy. And but I think, people have to know, like you said, their plan so they can actually decide, hey, if I have like a 5-year mortgage, but I now want to sell my house in a year or two,
Yeah.
like, unless you've got like a really good penalty clause, right? Then,
That's a
like,
major one there.
yeah, yeah. If not, you're going to pay, right? So, what are some other tips you can give home buyers, like with regard to mortgage? Like as we wrap up, I know we're coming to the end of our show, but like maybe just one final thing. What can you tell, like especially first time home buyers who are just coming to the market, who are like just eager to get in? Like, what can you tell them?
Um, I would definitely recommend, first and foremost, finding a mortgage agent, saving your money, being sure that you're in a job that you're not going to leave for a year or two just to get that job security on the application. Um, being on top of your finances, your credits, your bills, anything outstanding, working with a mortgage agent and knowing what you want, like what your long-term and short-term goals are when it comes to like owning that house, because that will affect your mortgage as we discussed as well. So like always just like having that open communication with your mortgage agent and realtor and being completely honest and transparent, because like holding secrets isn't going to help anyone. Just being very transparent.
It's true. It's
Yeah.
true. That makes a world of difference. Not for anything else. It just kind of helps us navigate so you don't get into, you know, um, surprise.
Right? Completely just trusting like the people who are there to help you, just because it makes everything so much smoother, and it is a major purchase, so you want to like trust the people who are in place to like guide you and point you in the right direction and give you the best advice possible.
Yeah. And I know, the world we live in has so much advice on, TikTok or like even, even on Instagram, right? And I think people live this life, like everybody thinks, hey, I have this Instagrammable life. It's like the perfect life. It has the biggest house on the best street and blah, blah, blah. But listen, not everyone can afford the biggest house on the best street, right?
Right.
And so typically you may want to show like you do, but at the end of the day, make it work for
Yeah.
you, right? So I think people are listening to all this advice online, which is not always true. Like maybe one or two points are good, but not everything is true, right? And so that's where I think, um, even though they're listening to all this advice, they do not sometimes get themselves a good, what should I say, a good person to give them
Yeah.
the best advice that is going to like look at their plans and work something out for them. And a lot of times they'll be in like spinning their wheels with people, or they'll end up getting someone who just wants to sell them something because they want to make a sale. And that's kind of not how life works, right? Like, I mean, yeah, it works for some people, but it's not about the sale. It's about the repeat business and about them getting into something that they're not, um, cringing about, right? Like I was listening to all these, articles that have been coming out recently, and all these people that have paid such a high amount and now can't close because, what are your thoughts on that piece? Like when people have bought brand new places from builders,
Yeah.
and now they're kind of worried that they can't close. Like, give me your opinion on that piece.
It's very sticky. I've heard a couple of different sides about it. I've heard of builders who they get people in, they get the deposit, and then they say, "Hey, the value of this is going up. We're gonna do
Yeah.
something shady, and maybe if we get our original people out, we can get more money for that same property." So I actually
Mhm.
had clients that came to me with that problem, and they had to lawyer up and fight for their home because they
Yeah.
actually couldn't afford it. They put a lot of money, a lot of down payments, a lot of deposits into it. And when it came time to, like before they even closed a few years before, the builder said, "Hey, can we get a mortgage commitment, a letter?" And at the time, no lender was going to lend out 3 years for pre-constructions because like sometimes there's delays and they don't want to have that money for something that's not,
Mhm.
guaranteed all the time. So it was a sticky situation. And I feel like when it comes to pre-construction, it's always best to go with someone who has the most knowledge, who has like, the know-how to guide you. And I recommend for first-time home buyers, especially if you're buying a pre-construction home, go in with a realtor because there's a lot of lingo and things that you may not notice that a realtor would, and that can affect you actually getting your home, depending on the type of builder you're dealing with as well.
Yeah, most important. That's really good advice, and thank you for that. Because and the reason why I say that is because I've had so many people who really think it's pretty easy. They've gone in, they've purchased property, they haven't got a lawyer to do a once over on the articles. We know fully well that if a lawyer had seen those articles, or I mean, I would have flagged them, but I would have said to them, I'm not a lawyer. You need to go to a lawyer
Yeah.
and see if, and have them explain these articles to you, right? And, they would have flagged them. Now, these builders, no offense if there's builders watching, we love you.
You're the
Just,
best.
but listen, they're also not all of them are made of the same caliber, and I feel like even they are putting these articles in place because they think they can just be like, no, no, these are the articles. You want to buy the house? This is what it's going to take.
Yeah.
And a lot of people just give in because they feel like they are like held hostage because
Yeah.
the builder won't move off the clause,
Right?
right?
They pretty much
But
are hostage.
yeah,
They're stuck.
yeah. You know what I say to people? Look, I'm not trying to resell you on resales. Now that the market is tough, builders really want to work with us agents.
Mm-hmm.
But what I would say is that when you walk into a pre-constructed property, a pre-sale property, a resale property, um, not a pre-sale, a resale property, you know what you're
Yeah.
getting. You walk in, you take a look at the room size, you kind of know what you're getting. Whether the paint looks fresh or doesn't look fresh, you know what you're getting, right?
Exactly.
And so why pay extra money, top dollar? Because new properties are at a premium, right? So why pay top dollar and then we can't even qualify your purchase until, the 11th hour, right? So it's like a lot going into this,
It,
right?
it's a lot. There's a lot of moving parts, and builders, as much as we love them, not all of them are the greatest. And,
Yeah,
there's a lot of shady things that happen, unfortunately.
yeah.
Yeah.
Yeah, and I've been hearing a lot of nightmare stories recently, like especially now because people are having a hard time closing. And, I mean, it's like, I don't know how you got your $250,000, $350,000, but
Right?
I don't even care if I won the lottery, I would want to lose it.
Yeah.
Yeah. So as we wrap up, what's, tell people where they can reach you and then maybe something that you want to leave people with that I haven't touched on.
So to reach me, you can find me on Instagram. I'll probably say my name, but it's at Mortgage by Kimberly. You can always call me, 437-388-2025. My advice for first-time home buyers is to be patient, save your money, save it into some incentive, whether it's first-time home buyers, savings account, RSP, somewhere, save it. And look to a mortgage agent, a financial planner, which is also me, to guide you. And, always trust your realtor as well.
Yeah.
So,
Yeah. Listen, it's a big purchase, right?
yeah,
And for those people, I'll tell you, it's a big purchase. And if you can't trust your realtor and you can't stand them and you don't think they're giving you the right advice, you're buying the house with the wrong person. And
exactly.
same with your mortgage person. You have to be able to have this 100% trust
Yeah,
because this is your biggest purchase. And you mess up on this one, you're going to be wearing it for a long time.
absolutely.
But for those of you who don't know me, my name is Jacqueline Watson. I'm a realtor with Sutton Group Tower. I do the show. It's elementary. You find it on podcast on Spotify, Apple, and wherever you listen to podcasts. So even though you've listened to the show, and I thank you for your time, maybe if you're in the car, listen to it again. And just give us a little like or something. I
Like,
don't know what you do with it. But
follow,
anyway.
subscribe, all that good stuff. Turn on your notifications.
So yeah, it's all. I want to thank you first of all, Kimberly.
Thank you
Kim,
for
I was
having
calling you Kim, but Kimberly,
me.
for your time.
Thank you.
I so appreciate it, and for all of you that spend your dinner hour with us. Thank you so much. It's so appreciated for you to spend your time with us. Now, if you're looking to just get a little more information, you don't have to be a first-time home buyer. Get in touch with Kimberly, and yeah, and if you have a topic that you're interested in and you'd like me to unpack a bit further, then DM me or just drop a comment when I post this video, and I'm happy to look into that as well. But until next time, thank you so much. It was so much fun. Thank you, Kimberly.
Thank you.
See you
Bye.
soon. Bye.